everyone. I'm Laura Davidson, partner here at Fourlane. Thank you for joining our session on the Intuit Enterprise Suite, Part 1. Whether you're evaluating IES for the first time or exploring what a transition to the cloud might look like, today's goal is to give you a clear understanding of what sets IES apart from traditional QuickBooks products and how it can simplify operations for companies managing multiple entities or complex financial structures. Before we dive in, let me give you a quick overview of what we'll be covering in this session. We'll start with the foundation, what Intuit Enterprise Suite or IES actually is and how it fits into Intuit's broader ecosystem of financial management tools. From there, we'll take a look at how IES compares to QuickBooks Enterprise Desktop. This will help you see the practical advantages for companies that are ready to move into a more automated cloud-based environment. Once we understand that, I'll walk you through the core navigation, how users move between entities, how permissions are controlled, and how multi-entity environments are structured. Then we'll get hands-on with one of the most powerful features, intercompany automation. You'll see exactly how bills can be allocated across entities and how journal entries stay balanced without manual effort. We'll also talk about the role of AI in IES, how it helps automate data entry, flag anomalies, and improve accuracy across your books. Throughout this presentation, I'll guide you through some quick practical scenarios so you can visualize this workflow in action. And then by the end of this session, you'll have a clear picture of how IES simplifies multi-entity accounting and positions your organization for growth. So with that roadmap in mind, let's start right at the foundation, what Intuit Enterprise Suite actually is and why so many growing organizations are starting to move to it. Intuit Enterprise Suite, or IES, is Intuit's ERP-level platform built on the same technology that powers QuickBooks Online Advanced. So, if you've used QuickBooks Online before, it'll feel familiar. But IES takes that framework and expands it into a fully integrated enterprise solution. IES is built on that same platform, but expands it into an ERP-level solution. In simpler terms, it's the next step up for growing companies that need more control, automation, and scalability, especially if you manage multiple companies or complex structures. The key difference is that IES handles multi-entity operations natively. You can view and manage multiple company files, run consolidated reports, and automate intercompany transactions, all from a single login. And because IES is 100% cloud-based, there's no need for remote desktop connections, VPNs, or hosted servers. You simply log in from any browser. Your data is protected by 250-bit encryption. That's the same level used by major financial institutions, so you can trust that it's secure. The practical impact for your business is huge. Easier access for your team, real-time accuracy across entities, and far less time and money spent maintaining IT systems. In short, IES gives you the enterprise capabilities you've been asking for without losing the simplicity and familiarity that makes QuickBooks so efficient. Let's look at one of the most common questions we hear. Why should we move from QuickBooks Enterprise Desktop? On the surface, both systems are QuickBooks products, but under the hood, they're built for very different operational models. QuickBooks Enterprise, or QBES, is a desktop-based system. It has served thousands of companies well for years, but it's fundamentally built for local environments. That means your data is stored on a local server or through a third-party host, and that often comes with higher IT cost and maintenance. IES, on the other hand, is a true cloud platform, natively web-based and accessible from anywhere, on any device, without the need for additional hosting. It gives your team secure, real-time access to your books without worrying about version conflicts or server downtime. The differences become even clearer when we look at workflows. In desktop, intercompany transactions must be entered manually, usually through journal entries or adjusting entries at month end. In IES, Those transactions can be fully automated through account mapping and entity linking. That means you enter a bill and it automatically posts the matching entry to the other company file. Automation goes even further with IES's built-in AI. The system can learn from your transaction patterns, auto-code vendor bills, and flag anomalies that might indicate a miscoded expense or unexpected trend, something desktop simply can't do. And perhaps the biggest leap forward in reporting is in reporting. In desktop, if you want consolidated data, you have to export multiple reports to Excel and manually merge them. In IES, you can see consolidated financials instantly within the app, filterable by entity, class, or dimension, all in real time. So when clients ask, is IES really worth it? The short answer is yes. If you're at the point where you've outgrown manual processes, hosting costs, and the limitations of desktop, IES is a natural upgrade path. It's modern, it's automated, and it's designed for multi-entity efficiency. One of the first things you'll notice when you log into IES is how seamless it is to move between entities. At the top of the screen, there's a multi-entity dropdown. That's your switcher. Instead of logging in and out of separate company files like in Desktop or in QuickBooks Online, you can simply click and toggle to another company in seconds. It's an instant time saver, especially for accountants or controllers who work across multiple books throughout the day. IES uses role-based access control, which means every user only sees what's relevant to their job. So if you have users in one division who shouldn't see another entity's data, or executives who need high-level summaries but not transactional detail, you can tailor their access precisely. That structure not only supports cleaner workflows, but also strengthens internal controls and audit readiness. Another powerful visual you'll see right away is the dashboard. Each user can personalize their dashboard with tiles for KPIs, bank balances, or intercompany activities summaries. It's designed to give an at-a-glance view of what matters most the moment you log in. Once your entities are defined and connected, the next major step is intercompany mapping, and this is where IES really starts to deliver value. Under the Multi-Entity Settings tab, you'll find a section to map your due to and due from accounts. This is essentially where you teach IES how to handle transactions between your companies. Think of it like drawing a bridge between two ledgers. For example, when one entity posts an intercompany transaction like a shared expense or a management fee, IES automatically knows which account to debit in one company and which account to credit in the other. You also have flexibility in how those transactions are allocated. You can split them by percentage, say 60% to one entity and 40% to another, or use fixed dollar amounts for recurring allocations like monthly rent or insurance premiums. Once the rules are defined, IES does the rest for you. When a transaction is saved, the system instantly posts the corresponding entries across each linked company. No re-entry, no manual balancing. One of the biggest advantages here is that IES removes the need for month-end intercompany reconciliation because the system automatically posts both sides of each entry. Those balancing and cleanup steps that used to take hours in Desktop now happen instantly and accurately. So with that, let's go in product. This is IES. Up here, this is the switcher. So I can get to the other company so quickly. So this is the Keystone Terra. Now, this company does not have the multi-entity dashboard. That is only in your main company. I'm going to go back over to Keystone. Here you can see that multi-entity here. First of all, this is your dashboard. There is also a dashboard on the overview on multi-entity. This can be filtered by the different companies that you select. Right now, it is consolidated. So the dashboard is consolidated. It's now showing me for both of my entities. I can switch that. And now it's going to show me just for Keystone Terra. Okay, so that's a wonderful feature. And then here is where we do the intercompany account mapping. So this would be your source company, and then over here are your target companies. So if you have more than just the one target company, they would list here. This is coming from your GL accounts. So here I can pick my source companies, intercompany receivable. And on this side, I'm picking my target companies, intercompany payable. There's also elimination account mapping. So here's where I have my source, Keystone Construction. I pick my due to on this side. Keystone Terra, this is my secondary entity, so my target. And so I grab my due from Keystone entity on that side. That's just part of the setup that we'll go through. Most of the settings are very similar to what you would see in QuickBooks Online. Here's also where we would go through users, roles, and preferences there. Now, the next, we're going to go into one of the most time-saving features in IES, the bill allocation across entities. So instead of entering the same vendor bill multiple times, you just enter it once, then click Allocate Bill. From there, you simply choose which entities will share the expense and define how much each company should take. You can allocate it evenly by percentage or by fixed dollar amount, whatever makes sense for that expense. When you click Save, IES automatically creates and posts the corresponding entries across all linked entities. That means your due to and due from accounts are perfectly aligned instantly. No more copying, pasting, or adjusting later like we often see in desktop environments. So this is that single workflow that's going to reduce a lot of time there and error. I'm going to take you in product. Let's go look at the bills. So I'm going to come over and create a brand new bill. Let's do this for construction materials. I'll throw in a bill number here. Then this looks like this was memorized from before. I'm going to pick, let's do, I think I got job materials, job supplies. So we'll do job supplies, and let's say this is a big one. We're going to do 17,500. Now on this side, I'm in the source company. I am going to choose a customer project and job here. So let's actually do Elijah Lopez over here. Now I can pick a class. I can also do dimensions. Dimensions we'll touch in another webinar. But dimensions are another layer of reporting where you can do location, you can do different types of work. Here, this is a construction sample file. So this is giving me, I'm doing a job for the US for the earthwork. This is actually for grading concrete. I can do poured concrete, and then I can also come in and select my utilities. So this is actually something that we can take a look at later. This is going to be on the profit and loss by dimension. So we'll look at that on probably the next webinar. Now from here, what I'm going to do is allocate this. So what this does is takes me into the allocation window. I click allocate again, and I'm going to choose my companies. So I'm going to allocate to these two companies. Now I can do by percentage or I can do by amount. So what I'm going to do here is show you, I can actually come in here and let's do 3,300 here. So this is already going to a GL and a project. Now on my target company, it doesn't bring over my GL. So if my chart of accounts are mapped right, I can pick the same one, so 6510. Now here I can come in, it gives me my balance. So I can put in my 14,200. And see, the customer job does not carry over here. So if I have a customer job on this side, I can go pick it here. So now I can save my allocation. Now, this allocation will show up in a few places. So first of all, under multi-entity, I can go to intercompany transactions. And I'm not sure if it had a few today. Let me see if we can find this real quick. Anyway, it's going to take you right back to your allocation, so you would be able to see it here. It just doesn't have them numbered here for me today. So then the other thing we can take a look at, so I can go look at my reports. We can go look at balance sheet. Now I'm still in the source company, so that's going to be here. And let me give it a second here. There we go. So here I have 14,200 going to my Elijah Lopez. So it's posting to my intercompany and it posts to my job supplies. So now I can also go over to Keystone Terra. Let's go look at the balance sheet over there real quick, just to show you how this comes over. And let's go down here. So here's my, some big numbers there. So here's my intercompany. Click on that. And here also you can see that 14,200. To the Sophia Chang. Now, this brings over the name. It doesn't bring over any of the dimensions. So if you did need to add those, we would have to come in here and do this on the Terra side. All right, so let's jump back over here. So looking at journal entries. So even with automation, handling most intercompany activity, you'll still occasionally need journal entries. Things like year-end accruals, reclasses, or audit adjustments. In QuickBooks Enterprise Desktop, that meant creating a separate journal entry in each file, hoping your debits and credits matched. In IES, that entire process happens in one place. You can enter a single journal entry and then allocate it across multiple entities, either by percentage or by fixed dollar amounts, just like we did in the bill. When you click Save, IES automatically creates and posts the matching entries in every linked company, keeping everything in balance. What's more, you can assign dimensions such as location, department, or project for deeper reporting. That means those adjusting entries not only stay balanced, but also stay visible in the right reporting context. And that's what we see here. Now, like I said, this is particularly powerful when you're doing your month end or year end close. It's going to save you hours because this is already going to be balancing because of that automation behind the scenes. Now, in product, so when we go into journal entry, so you do have your normal journal entry here, just like you do in QuickBooks Online. So this is normal. It does have your dimensions over here. But for the intercompany transactions, you just need to toggle this on. So then from here, I can put in my journal entry number. Here is where I'm going to pick my accounts. So this is my source company that I'm going to use, and I'm also going to use my target company. Here is where I can come in and pick my account. So if I had checking account and I had a debit here, record it that way. And here, this is going to be my intercompany for Terra. Okay. And then this one is on the Terra side. So let's choose, I'm just going to grab the checking account because we're here. So that's going to be 1525. And then this is going to be my intercompany on the Terra side. Okay, so that's my liability. And then so I can save and close that. Now, again, when I come over to my intercompany transactions, that's going to show in here. So it gives me my allocation. And wrong one. Hang on. I'm at my journal entry. It would be, I think it's this one. Oh, that's the one thing I did see. Oh, it did bring in my reference number. Look at that. Very good. I tested it's a sample file, so it gets a little wonky here, but it didn't take my journal entry number earlier, but it looks like it did for this one. So this is my intercompany. So that post not only in my source company, but it also came over here into my target. Okay, let's jump back over here. So let's talk about one of the most powerful enhancements in IES. It's embedded artificial intelligence. The AI engine works quietly in the background to make data entry faster and smarter. You can simply drag and drop a PDF bill or receipt, and the system will automatically read the document, recognize the vendor, pull in the amount, and even suggest the likely expense category. The best part is it's self-learning. As users make corrections or reclassify items, the system remembers those changes and improves its accuracy over time. Beyond just automation, the AI also acts as a proactive reviewer. It can flag anomalies. For instance, if cost of goods suddenly jumps compared to previous periods, or if an expense looks out of trend, those alerts help you catch issues early before they flow into your financial reports. Um, I'm going to take you back over. I just want to see if we can find a couple of areas where we can see where that AI is working. So one of the things I saw the other day that I thought was pretty cool is when you look at invoices. Let me just grab one of the ones I had. So when you come in here, there's these little stars that you can see over here. When you click on that, it gives you some more information. This is all AI assist, they call it. So it tells you how many days to pay on average, how many invoices paid in the last 12 months. There's a few other things over here. So consider adding late fees, right? Accept online payments. So there's a few other things over there. Next, let's go take a look at our reports. So when we come over here, what you're going to see over here is, first of all, there's another little star over here. So when you click on Review Summary, this is the AI working over here. So it gives you kind of a KPI overview. It's giving you, here it's giving the cash balance, average 726,000, tells you when it peaked, modest increase. So it's giving you some different data points in here to be able to review. Also shows cash flow, saw large spikes in both inflows and outflows. And then down here, it gives you a little bit more. So you can dig into those. Now, this you can edit, you can export it out. We can do it for different time periods. We can apply filters. So it could be a very powerful tool for your company. So all the automation we've seen throughout IES, from bill allocation to AI-assisted data entry, directly translates to efficiency and control for your business. Instead of spending hours rekeying or reconciling data, your team can focus on reviewing and interpreting results. That shift reduces errors, speeds up month-end close, and provides faster financial visibility. Every transaction in IES is fully logged and traceable, which is a huge advantage for audit readiness and compliance. You'll always know who entered what, when, and where. No guessing, no manual tracking. And for Fourlane consulting teams who support you, that same automation means less time spent on data cleanup and more time providing the advisory insights that move your business forward. Before moving into implementation, There are a few key setup steps that really make the difference. The first is consistency in your chart of accounts because IES pulls consolidated data from multiple entities. Even slight naming or structural differences can cause mismatches during reporting. Next, double check intercompany mapping. That's what tells IES how to post entries between entities. If it's off, transactions can land in dispense accounts or fail validation altogether. In the sample file, as I was reviewing it the other day, one of the accounts for intercompany mapping was actually going to prepaid inventory. So definitely can cause some problems there. The third area is permissions and roles. These are role-based in IES, which gives you great control, but it's important to make sure users only have access to the entities they actually work in. That keeps your data clean and compliant. Finally, we use Fourlane's internal setup checklist to make sure all entities are configured consistently before go live. That includes accounts, mappings, and user roles, everything needed for a stable environment. Getting these right up front means your automation and reporting will perform flawlessly once you're live. To wrap up, let's highlight what we've seen today. First, IES automates what used to be the most time-consuming part of multi-entity accounting, the intercompany transactions themselves. That means less manual work and fewer reconciliation headaches. Second, because all entities share standardized data and mapped accounts, your consolidation process becomes seamless. You're not trying to clean up different versions of the same chart of accounts. It's consistent from the start. Third, automation and AI work together to minimize errors and give your team time back. Time that can be spent analyzing results instead of re-entering data. And finally, that upfront investment and proper setup pays dividends right away. Faster month-end closes, more reliable numbers, and cleaner audit-ready data. This foundation sets you up perfectly for what we'll cover in Phase 2. Consolidated reporting. We'll look at forecasting, budgeting, and deeper financial analysis. We'll also look a little bit more at the AI and how that can help us in reporting. So I think that's going to be pretty exciting to start digging into that a little bit more. That is all I have for today. I thank you all for your participation. If you have any questions or need help implementing any of these features, I'm happy to assist further. Thank you very much.